Saving money or handling your money is an act of intentionality. You got to just do it on purpose. What happens with most people is we earn money and we spend it, and then we look up and go, where'd it go?
In a recent episode of his show, Dave Ramsey discussed a pressing issue: the potential impact of Russia and China on the American economy. Dave Ramsey opened the conversation by addressing concerns about the US dollar, which has been facing record levels of inflation. Dave highlighted a significant event on the horizon: the BRICS Nations Summit, expected to take place on October 20th or August 22nd. These BRICS nations, comprising Brazil, Russia, India, China, and South Africa, collectively account for a substantial portion of global GDP. The key point of contention in this discussion is the possibility of these nations announcing the introduction of their own gold-backed currency. Such a move could potentially challenge the dominance of the US dollar as the world's primary reserve currency. What adds complexity to this situation is the role of Saudi Arabia. Dave Ramsey pointed out that if Saudi Arabia were to join forces with the BRICS nations and abandon the US dollar, it could lead to a significant repercussion known as losing the petrodollar. This means that countries currently holding US Treasury bonds to purchase oil from Saudi Arabia would see those dollars flow back to the United States. The influx of dollars into the US economy could, in theory, lead to a surge in inflation, potentially causing economic instability. The crux of the matter, as Dave Ramsey discussed, is whether this threat is substantial or merely a product of fear-mongering. While there is considerable speculation and debate surrounding this topic, Ramsey offered his perspective. According to Ramsey, it might not be easy for Russia and China to convince Saudi Arabia to take such a drastic step. He expressed his belief that Saudi Arabia is likely too astute to believe that undermining the US economy would be in its best interest. Furthermore, Ramsey pointed out that other BRICS countries would also face adverse consequences if the US economy were to falter, as they depend on it for support. Ramsey's analysis underscores the intricacies of the situation. While the potential introduction of a gold-backed currency by BRICS nations and Saudi Arabia's role in this scenario are significant points of discussion, the actual outcome remains uncertain. Ramsey's perspective provides valuable insight into the potential challenges and consequences involved in such a complex economic shift. Dave Ramsey continued his analysis by emphasizing the economic complexities of the situation. He pointed out that if 40% of the global GDP were to undermine the remaining 60%, it would be economically counterproductive. In his words, it's unlikely that these nations would kill themselves by killing us. Ramsey also injected a note of skepticism into the conversation. He questioned the feasibility of getting all these communist nations to cooperate without internal conflicts. He likened the idea of perfect cooperation among these nations to a humorous long shot, even though they might manage to align their interests temporarily. To illustrate this point, Ramsey brought up the example of the euro in Europe. Despite the relative harmony among European nations compared to the group being discussed, the euro didn't have a substantial impact on the global economic landscape. Therefore, he expressed doubt that the proposed changes would significantly alter the lives of everyday people. Dave Ramsey then made an interesting analogy, stating that he doesn't prepare for meteorites or apocalyptic scenarios. He used this analogy to underscore his belief that the chances of these economic changes significantly affecting individual lives are minimal. In the event of a total economic and governmental collapse, he argued that basic necessities like bottled water and self-defense tools would be more valuable than traditional assets like gold bars or paper money. Dave Ramsey's perspective in this discussion emphasized the complexity of the situation and his doubts about the feasibility of these changes significantly impacting people's lives. He underscored the importance of practical preparedness in extreme scenarios rather than relying on traditional economic assets. Dave Ramsey further expanded on his perspective, highlighting the potential consequences of such a significant economic and governmental collapse. He emphasized that in such a scenario, private property rights as people know them, including the real estate they own, could be at risk, and they might be taken by others who are armed. Ramsey reiterated his belief that in a true collapse, the essentials for survival would be bottled water and self-defense tools such as bullets. However, he clarified that he personally isn't stockpiling these items, except for bullets, which he mentioned can quickly rise in price, particularly due to his shooting hobby. He continued by sharing his stance on the matter, explaining that he doesn't spend his time worrying about it. Ramsey mentioned having friends who immerse themselves in reading about these scenarios and becoming overly concerned. In a recent argument with one of them, he advised them to disconnect from the internet and not to fret excessively about these speculative scenarios. Dave Ramsey's skepticism regarding the likelihood of apocalyptic economic scenarios unfolding stems from his perception of the fundamental flaws in the underlying theory. He argues that expecting a consensus among a group of nations, especially on a matter as significant as changing the global reserve currency, is unrealistic. Ramsey holds the view that nations are primarily driven by their own self-interests, which often diverge. In other words, each nation prioritizes its individual economic and geopolitical advantage. This perspective aligns with a common belief in international relations and economics that states act in their self-interest. They make decisions to maximize their own well-being, security, and economic prosperity. Ramsey contends that nations, regardless of their characterizations as evil or not, are more inclined to prioritize their self-gains over sustained cooperation in the long term. According to Ramsey, achieving unity among nations with varying interests and ideologies poses a significant challenge, especially over an extended period. While temporary cooperation on specific issues might occur, he questions the long-term stability of such collaborative efforts. Ramsey suggests that conflicting interests and ambitions are likely to disrupt any sustained unity as time passes. Furthermore, Ramsey highlights the economic interconnectedness of these nations with the rest of the world. Any drastic actions that significantly disrupt the global economy, such as undermining the US dollar, could lead to unintended negative consequences for the involved nations. This interconnectedness serves as a potent incentive for these nations to avoid actions that could harm their own economic interests. Dave Ramsey's skepticism regarding the feasibility of extreme apocalyptic scenarios is rooted in his understanding of international relations and economics. He believes that the pursuit of self-interest and the inherent challenges of achieving and maintaining consensus among nations with diverse interests make it improbable for such catastrophic events to unfold as predicted. His perspective underscores the pragmatic notion that nations typically act in their self-interest, and long-term unity among them is a complex and rare occurrence. Additionally, Ramsey casts doubt on the notion that these nations collectively represent 40% of the world's economy, and suggested that this number might be too high. He emphasized the point that if these nations were to destroy 60% of the world's economy in pursuit of their goals, they would ultimately harm themselves, as their economic well-being is interconnected with the global economy. Dave Ramsey's perspective on extreme economic scenarios is anchored in skepticism about their feasibility and a focus on practical preparedness. He approaches these scenarios with a pragmatic mindset, acknowledging the complex and uncertain nature of global economics and geopolitics. Ramsey advocates a proactive approach that prioritizes preparedness over reacting to speculative threats, encouraging individuals to secure essential resources and skills for various situations. This practical preparedness includes having a well-structured financial plan, maintaining an emergency fund, and acquiring adaptable skills, empowering individuals to navigate economic stability or turbulence. Lastly, he shared an interesting insight that he had recently encountered: an economist's prediction about China's future. According to this economist, China might face economic challenges in the next 20 years due to a declining workforce caused by controlled birth rates. Ramsey found this point noteworthy, implying that China's ability to maintain its status as a major economic player could be hindered by this demographic shift. If you have found this video insightful, don't forget to show your support by liking the video and subscribing to our channel. Also, feel free to share your thoughts in the comment section below.